disappointed in a couple of quarters, right? A couple of parameters, right?
It was disappointing on a couple of parameters, and we saw the reaction in yesterday's trading session as well, albeit on low volume. So I expect that weakness to continue today as well. The FMCG index has been the best performing index this summer, but some of the results have not been the best, to be very honest, because HUL revenues largely in line, 50 crores below estimates, volumes at around 4%. But it's the EBITDA where the problem is, because the EBITDA came in at around 3377 crores. The street was working with a number above 3400 crores. The margins are lower. The net profit appears that it's a beat as against street expectations, but that's primarily because, effective tax rate was just around 18% versus 26% the same time last quarter. Ad spends as a percentage of sales have been 7.1%, which is at a multi-quarter low. So despite that, the EBITDA has been a miss. Why is that? Well, because the gross margins are at the lowest that we've seen in the last at least 15 to 20 odd quarters, 45.8%. And what's not, allaying fears is the management commentary, because they are optimistic, but they're cautiously optimistic, and they believe that going forward, they will up the ad spend. So will that upping of ad spends come at the cost of margins or not is something that we'll have to monitor. For now, expect some red on the stock.
Okay, and we've seen that taken place in the Mahindra session yesterday. It was the only Nifty stock that had a big fall. It was down about 3% odd. But Kotak Mahindra Bank, a lot of brokerages have raised their target prices after a very good set of numbers that came through. Ekta has the fine print for us. Ekta, over to you.
Well, good quarter which came in for Kotak as well. So NII was up 26.8%, net profit was up around 27%, net interest margins recovered back to those levels of above 5%, so 5.17%, loan growth of 25% year on year, and slippages below 1,000 odd crores. What could weigh against the stock is the valuations, considering that it's trading at around over 4 times price to book value on an FY24 basis, and the street is a little concerned that this margin elevation that we've seen for Kotak might not continue going forward. So maybe that could be a little bit of a dampener on the stock today.
No, you absolutely. That was the point I was going to add. Deposit growth has not been as strong as advances growth, so now they just have to raise deposit rates. So this NIM may be a little tough to sustain. Nigel, what about JSW? The numbers looked a bit shocking.
Well, yeah, the JSW numbers were disappointing. To, just give you one line on it, the benefit of lower cost didn't flow through, and the hit in terms of lower steel prices did knock them back. And that is likely to reverse from now on. But let's run you through the numbers. The consolidated EBITDA number, big miss out there. On the margin performance as well, a big miss. Remember, for JSW Steel, we look at the standalone EBITDA per ton. That's the India business EBITDA per ton. And that came in much lower than what we were working with. Came in only around 3,500 rupees on a per ton basis. That was further, the consolidated number further got hit because of subsidiaries, whether it is their coated division, whether it's the Ohio operations as the US operations, or even if you're looking at Bhushan Power and Steel, all of them reported EBITDA losses. But the management has said that all of that will turn around from the coming quarter itself. And the overseas operations, you're talking about the European business, that's the Italian business, as well as the US business. Put it together, they delivered an EBITDA loss of around 100 crores. In the previous 3 quarters, it was around 275 to around 300 crores odd. So a miss on the numbers, but I think the street has digested most of that. It could open up mildly in the red, and then in fact we take it from there.
Okay, thanks for that. So that's on JSW Steel, but good set of numbers coming in from SBI Life. Surbi has more on that. Surbi, over to you.
SBI Life reported a strong performance. Their APE saw a decline of just 1% on a year-on-year basis, but their value of new business, that grew by 24% on a year-on-year basis, and the VNB margin, that expanded by nearly 640 basis points to 32%. The expansion was largely led by the higher share of non-par products. In their con call, the management said that they are confident that the premiums will grow by 20 to 25% this year. Their focus currently is to grow premiums, and the VNB margin is just going to be an outcome of their change in the product mix. They are confident that the second half of this fiscal is going to be much better than the first half. We'll go with the green on this one.
Thanks a lot for that, Surabhi. Torrent Pharma numbers, Ekta?
Well, largely in line, Lata. So no real big miss or beat which is coming for Torrent. Revenue was up 7%. Street was anticipating a 10% growth. Domestic growth, which is basically the bulk of their business, was up 12.5%. US was down 5.1% on a Q-on-Q basis. That is because of double-digit price erosion as well as lack of new launches. and margins came in just about at 29-30 odd percent, so no surprise there. Profit down around 9 odd percent. The profit miss was because of the Curatio acquisition, so that's the reason why the profit missed estimates. The company is confident of outpacing the industry growth led by India and Brazil. US is expected to remain subdued, but the street is probably going to look at India more than the US in the near term when it comes to Torrent.
Okay, thanks Ekta for that. Well, let's find out what's the latest on DLF this morning. Sonal's tracking that one for us. Sonal, good morning.
Good morning, Sonia. Well, for DLF, the numbers were decent, largely in line with what the street was working with. Bookings, they were flat on a quarter-on-quarter basis, but they were up 36% on a YOY basis to come in at 2,052 crore rupees. The bar chart will come up for you. It has fallen from levels of Q4, but still is seeing some increase on a YOY basis. Lease income for the company in the DCCDL business was up 6% sequentially, 20% on a YOY basis, and the company says that the housing demand is quite strong, and especially in the festive season as well. Luxury segment continued to witness sustained demand. They've been able to reduce their debt on a quarter-on-quarter basis, which now stands at 2,142 crore rupees. They had a surplus cash flow of 410 crore rupees, out of which they paid dividend close to 292 crore rupees. On the back of this decent residential bookings that the company reported, Jefferies has raised their FY23-24 pre-sales estimates by 10 and 7%, and they expect the company to continue to do well in both the segments.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Surbhi. She's here to tell us about United Spirits. Surbhi?
United Spirits reported better than expected results. Their revenue was up 18% on a year-on-year basis. EBITDA margins came in at 16% versus our poll of just 14%. Gross margins did see some contraction, but that was expected because of the inflationary pressure. The net profit included a one-time profit from a sale of business. If you exclude that, the net profit was down 30% on a year-on-year basis. They did report strong volume growth as well. Their overall volume growth was up 9% on a year-on-year basis. And this was largely led by the prestige and above segment, which is their premium segment, where the volume growth was 14%. The realizations for this premium segment was also up 8% on a year-on-year basis. In the short term, the management does expect the inflation challenges to continue, but they're confident about their revenue growth in this for FY23. We can expect the stock to be in green today.
Okay, well, after such a hectic Diwali weekend, for sure the stock will be in the green this morning. Thanks a lot for that. But let's go back to Sonal. She's tracking IGL this morning. Sonal, why is that?
Well, I can't say the same about IGL, what we said about USL. It's expected to be in the red today because weak set of earnings, especially on the margin front. Higher gas costs are for sure impacting companies' performance this time around. Revenue growth of 11%, but margins, they were down 15%. That is the EBITDA, and lower than estimates. Margins came in at 14.8%, which is lower than the estimates of 17.7% as well, leading to a profit decline of 1%. If we look at the EBITDA per unit, it came in at 7.1 rupees versus a poll of 8.8 rupees per unit. Volumes were lower as well at 8.1 MMSCMD versus 8.7 MMSCMD. Jefferies, on the back of this, has seen a marginal decline in their FY23 EBITDA at 7 rupees versus 7.1 rupees, which is not much, but considering that the margins have fallen sharply this time around, expect the stock to be in the red today.
Okay, all right. Thanks a lot for that. So now, well, let's do a quick recap then of all the top stocks we just covered. Stocks with positive news flow include ICICI Bank, Kotak Mahindra Bank, SBI Life, DLF, and United Spirits. While stocks with negative news flow include Reliance, HUL, JSW Steel, Torrent Pharma, as well as IGL.
Okay, let's do one thing. Let's take a short commercial break. But